Welcome back for another hash highlight talking about what's going on in Bitcoin mining. And it's an interesting one because we're expecting a negative difficulty adjustment in about 6 days. Hash has been coming offline and hash price remains unchanged. So miners are bracing for this rough market that we're in, but hopefully there's more opportunity on the upside to be running these rigs and stacking lots of Bitcoin. Bitcoin is always interesting, my friends, and that's why I wanted to jump in with another hash highlight starting at block 944,899. Did you know that about $42 billion worth of value moves on the Bitcoin blockchain daily right now? Daily value throughput, $46.4 billion. Speaking of fun facts, let's talk about Bitcoin mining. It is an interesting market, folks. Right now, we are in the middle of a hurricane, an economic hurricane, because mining revenue has come way down. We made new all-time lows. I think it was in February, like we covered in the last hash highlight. And here we are. The top line revenue is not great in terms of that $31, $32 top line revenue per petahash has a lot of miners in pain. A lot of miners, unless they have extremely cheap power or extremely efficient hardware, are in the pain zone right now. And like Rothschild said, buy when there's blood in the streets. There's certainly some blood in the streets right now. Last week we painted another weekly green candle. So that is interesting, as Bitcoin has held pretty strong at about that $70,000 mark. So last week closing up 2.53%, $1,747, closing at $70,746, and that's about where we are right now. Looking at mining economics, hash price has been on the downward trend, but we're starting to put in maybe a base on hash price, maybe, hopefully. Is that hopium? Let me know in the comments if you think I'm hitting the hopium pipe here as a miner, because obviously I'm invested in mining. I have a vested interest in economics getting better, but I'm not here to blow smoke at you. I want to give you a real, raw take on how I'm seeing it. So hash price is holding about the same as it was a week ago at $32 per petahash. And roughly that is about 16% up from those lows in February, give or take. Hash rate, seen a lot of hash power come offline. Last time I checked, the 30-day was at 1 zettahash, which is a huge milestone. Can the network continue to support 1 zettahash, gigawatts of mining, gigawatts and gigawatts of power? Of course, it's going to stay the most powerful computer network on planet Earth for the foreseeable, probably forever. But the question is, how efficiently are those gigawatts hashing? Because you've got real world costs, infrastructure, kilowatts, megawatts, and gigawatts. And a lot of miners are hashing in the red at a loss and unplugging. So we've seen the 1.15 zettahash start to cool off and come down. The 30-day is under a zettahash at 973 exahash. Interesting. Blocks are coming in slower as network hash power cools off, and currently coming in an average time at 10 minutes 22 seconds, and therefore we are expecting a negative difficulty adjustment. It was predicting 5% negative adjustment. Now it's 3.53% negative adjustment because blocks have sped up a little bit just since yesterday. Interesting to look at total mining revenue. Miners are competing for about $32 million worth of Bitcoin on a daily basis. And that is the new Bitcoin that's getting mined and referred to as the block subsidy. But it's also the fees. Fees are quite low. Average fees for block are about 1.3 million sweet Satoshis. Looking at, again, hash price from another perspective, showing that same downward trend, remaining fairly unchanged at 32. Now, bear this in mind. When we get that negative difficulty adjustment, all things being equal, let's say the Bitcoin price is still about 70K, and let's say that the fees are about the same. They've been low for quite some time now, but they could pick up a lot in a bull market. Only about 100 million transactions annually can be mined into blocks. That's not a lot of transactions, folks. 100 million. There are like 350 million people in the United States alone. And if only 100 million people wanted to get transactions on chain, it would take a whole year to process all those transactions. Hence, block congestion. If you're bullish Bitcoin and you think that the network is going to pick up activity, which I sure do, I'm very bullish, then fees could spike massively. Let's take a quick look at transaction fees. Zooming out a little bit as a percentage of the block reward. So obviously as that block subsidy comes down, fees are going to have to go up to support miners. And fees are quite low, as you can see, as a percentage of the block reward, under 1%. ASICs are still dirt cheap, relatively speaking. If we zoom out a little bit and look at the most efficient miners, they're trading for a Coke and a smile down here, and we have seen a big dip in the most efficient miner pricing. Let's run a little equation on the most efficient miners, such as a S21 XP, and it's crazy to think we're 24 months from the next halving, which is expected around April 17th, 2028. So we're more than halfway through this epoch. Let's look at what a 270 terahash machine, the S21 XP running at 3825 watts, and let's say you're all in at 7.5 cents per kilowatt hour, you would be stacking BTC at only 57,520. And so that's about a $13,000 margin when Bitcoin is trading for 70. So if you like stacking Bitcoin at 70, you should love stacking it efficiently through mining, owning hardware, not to mention other potential benefits like depreciation. You could be stacking BTC efficiently through an S21 XP for 57, 58 grand here. And for a DCA strategy, mining can be the best way to DCA because you're force feeding yourself Bitcoin every single day. Your machines are running round the clock. And if you were able to somehow, for example, prepay for your hosting and achieve a 20% discount, 7.5 turns into 6 cents. And that brings your cost to mine down to 46 from 57. 46 from 57. And think about it. If you like stacking with a 13K margin, and that's not factoring for future appreciation and everything else, right? But if you like stacking with a 13K margin, then you should love stacking it for a 24K margin. And if you're stacking 46K Bitcoin, that's a 24K discount per BTC that you produce through efficient mining. And if that's the case, 24 over 46 is like a 50% margin. And this is during the tough times when there's blood in the streets. Again, mining is in pain. Miners are unplugging, as you can see from that overall network hash rate coming offline massively. Miners are in pain. A lot of miners are underwater, a lot of miners hashing at a loss. But that spells opportunity for people that want to deploy capital into the space and take advantage of the opportunity to pick up the most efficient hardware for pennies on the dollar and get hashing efficiently. If you like stacking at these lows on the Bitcoin dippy dip here, and you're buying spot at like 70, then you should love efficiently stacking with a price advantage like this and getting locked in and positioned for the bull market to come. All right, folks, there you have it. Hash highlight today. Network hash rate coming offline. That's going to result in another decrease in difficulty, meaning that it gets easier to mine Bitcoin. You get more Bitcoin for the hash power that you have. It's crazy to think that you can get like an S21 XP 270 terahash for under $4,000 and be stacking Bitcoin under 50K in the right hosting situation if you've got access to the deals. And you can get an S21 XP for under 4K. I've paid more than that. I paid double that for S19s that were running at 90 terahash, just to give you an example of how much further your money goes in this market than it did back then. But look, you want to position yourself before everyone wants to be a Bitcoin miner, right? You don't want to be following the herd and the exit liquidity retail. You want to be smart. And that's why I have started the Proof of Workshop community on School. It's a free community. You can get a free lifetime membership if you're interested in getting a little deeper into the details of Bitcoin mining with real Bitcoin miners that are building real Bitcoin mining businesses. And I'll see you on the next one. Peace, love, and Bitcoin.